It must be incredibly frustrating for you to see how weak global growth is feeding into a political climate that's growingly against free trade and globalization. Is that going to get worse in 2017?
You know, what you describe is actually very frustrating because we know that it is counterproductive. And we know that it is not by withdrawing behind borders, by reducing trade, that the situation is actually going to get better. Equally, we think that international trade, globalization, has to work for all. It cannot just work for a few and ignore the rest of the population. It has to work for all, and that means probably reassessing those who lose out of globalization, those who are left to the side of the road. And policymakers have to make a determined effort to improve the education, to equip the people, to provide the safety net that will guarantee that people actually benefit from international trade and globalization.
A point to pick up on in terms of that answer is what's going on with a possible hard Brexit. How would that impact the UK and Europe? How damaging would that be?
You know, what is damaging first and foremost is the uncertainty. What will be the relationship? Will the financial institutions, which have been the strength of the city in London, continue to benefit their passport to continue to deal with the rest of the European Union, particularly the Eurozone? Where will be the centres of European banking, strength, supervision, and all the rest of it? That's what's really undermining the current situation. That's number one, the uncertainty. Then clearly the fact that one country, which was a member of the 28, is going to adopt a separate path, having new rules, possibly relying on the WTO standard set of rules with other members which have been the core of its trading relationships, is another big question mark on the horizon of those who want to know what the future will be before they invest, before they create jobs. So I think it's not healthy. The only thing that we know better now is the timetable, and that is good. So for the next 2.5 years we know that the situation is unchanged, and yet everything is changed. And it's that contradiction of everything is unchanged, but everything is changed, which will have to be addressed in the best possible terms by the parties.
I'd like to take you across to the United States, where we might have a rate hike from the Federal Reserve. At least that's what the implied probabilities are telling us. Is the world ready for a normalization of interest rates by the Federal Reserve? Because even though the U.S. economy might be ready, the rest of the world might not be.
You know, if there was such a hike, and presumably very gradual, phased in and well communicated, as Chairman Yellen has indicated, it would mean that the US economy is faring better. It would mean that employment is higher. It would mean that inflation is gradually picking up a little bit. And those are strong positive for the global economy. The US is the largest player in that game. So that's a positive. Second, developing countries, emerging market economies, have rehearsed that option already, and they've done that a couple of times now. So I think they're much better prepared in terms of monetary policies, in terms of tools that they can use, in terms of prudential measures that they can adopt, in terms of response to what will inevitably create, you know, a capital flow and you know, probably will draw some capitals out of those markets back to the US.